Okay, so look, today what I'll be covering is like what actually is like that price manipulation is, right? Like why people are losing the money and how you can make money accordingly, right? Today I will not be covering like if you are a new trader, I will not be telling you like that what Forex is, right? Because that is kind of introduction. So in that case, we're going to conduct another webinar, right? So what I will be covering today is like for all those who are trading into this market and knows what Forex is and they're not consistent, like why uh, they are not consistent and why they're losing the money, right? Because you guys have faced it that you are like placing a trade, and after that you guys get to see like that the trade is going against you every single time, right? The most of the time you just place the trade, it consolidates, like it holds the price for few time so that you like think like in that way that it is gonna be profitable in your way. You trade some more trader gets in, and just after that you get to see these spikes, right? So the first thing first, like the every other business, the Forex is also a business. So if somebody thinks like in that way that this is some kind of gambling, some kind of stuff like that, then they have to change their perspective in this, that this is not every kind of random business. This market is like this is, they have a predetermined goal set that the price will go up to that and the price will reverse from that, right? There is a predetermined level that will go in that way and that will come from there. Like if I take it to the chart, right? Just give me a second, people are trying to get in, let me approve them all, right? Okay, and after 10 minutes, we're gonna lock the meeting, right? Okay, so if you see in this chart, you can get to see like the price is going up, but how long they will go up? There is manipulators in this market. There is like presence of this, and they have predetermined limits, like that it will go from there to there. There is limits, right? It is not random that every random trader is placing their trade and it is moving the market. No, it's not like that, right? So they have predetermined goal set that they will take this market to here from here, and while doing so, they will do some stop on so that retail guys just loses the money. Those who are doing the technical analysis stuff without understanding anything, right? So that's where we're going to talk on that, like how they are doing it, right? Okay, so if you see here, right? So you can see like today I will just be talking about the basic stuff about the manipulation, that how they're manipulating and why they're manipulating and who are their targets, right? So I will not complicate you with too much like in-depth information. So what I will just talk on like the basics of the price manipulation that is happening every single day, right? But you are not able to spot it, right? So how you can spot it today, I will just talk a little bit about that, right? Okay. So look, the first thing first, you have to understand like who is manipulating the market, right? So here, if you see the key manipulators, I have named few. These are the key manipulators who is manipulating the price in their own way, in their direction, so that they can make the money, right? The first thing first is like the financial institutions. There's many big companies like global financial institution, those who are like trading all together, right? Yeah. So if you see here, there is central banks, there is hedge funds, there is Forex brokers, right? The broker you are trading with. So let's say if you're trading with like a random broker, like so whatever you're using, right? That broker is also taking part in this game, right? And if you see the big dog traders, what do I mean by that? That is kind of the traders, those who knows this, right? Those who knows the manipulation like us, right? And those who are also taking part in this game by trading in line with them, right? So if you are like if you know that how the manipulation is done, what you're doing, you're just doing the opposite trade the retail guys are trading, right? So if I tell you like that in this case, this is a previous resistance, right? So if I take you here, this is a previous resistance, right? So if you see, so all the guys like those who are the retail traders, so what they're doing in that case, they are just selling here, right? As a retail trader, what they will do, they will sell here, right? And just after that, so what we are doing, right, is like few manipulators, right? There is like operators, they are keeping the price, like they're taking the buy price away from their zone, right? as they're going up, because everybody's stop loss is here, and as they're going up, everybody's top is getting out, right? And now these are like, you know, pretty much buyers, right? So every retail trader, what they're doing, they're just buying in that case, like, you know, the market was holding here from here for one day, right? But if you see, they are just doing, and after that, if you see, it just collapsed, right? So what we do, they buy, we sell. They're buying here, this is the peak, right? We sell here. So if you see in this case, right, if you see in this case, just what you can see, like this place was was like, you know, a zone to trap the seller's liquidity. Every retail trader sold it, just it touched the resistance, and after that, if you see, it just dropped so that they can make some money. And after that, what happened, right? Just in one spike, this spike is made by the manipulators, right? And everybody, all the sellers are out in this game, right? So you have to do one thing. You just have to do, just like, you just have to trade in line with them, because you cannot beat the manipulators, right? Okay, so these are the key manipulators. They are just trading all together, right? There, if you have heard about the market makers, if you have heard about the inner circle traders, right?
But can you go a bit down, a bit before, back in a drill?
Okay, where do you want? Yeah, hi. Where do you want me to go?
On the Euro USD.
Okay, it's been recorded, right? It's been recorded. I will just drop it.
No, I need to ask a question.
Okay,
it's
sure.
not.
Yeah. Okay,
it's
sure.
not.
Okay, okay, sure. You just ask me.
Okay, so you were saying that by that move, they took the sellers out, which I understand. Perfect. But are we not counting the levels? This is where I'm getting confused, because if we have to
level thing is different, and the manipulation thing is different. Like if you
right,
it is not like that every time they will just play the levels, right? That, as I told you, that the market is like money driven, so they don't care about the levels, right? So where they just have to take out the liquidity, and that's it, and that's all this game is about. They have predetermined targets, right, here to there, and they will just take it there to there, and how they will take it, that depends on them, just by, like, you know, that wiping out the stop loss, wiping out the stop loss, right? And some extended stop loss as well, meanwhile. Okay, so if you see here, right, the most targeted traders and the most targeted strategies in this market, right? So people are like, you know, the 90% of the traders have read the same kind of book, right? And they're just doing the same kind of strategies, right? The same kind of stuff they're playing, and the manipulators know their zones, right? That where exactly they are going to place their trades, right? They knows that. Okay, so if I tell you, like, you know, the most of the traders, the most of the, like, you know, that beginners are the breakout traders, right? The price goes above, you take the buy. The price goes below, you take a sell, right? In that way. And the support resistance traders as well, as I just explained in the Euro USD. Just at the support people are buying, just at the resistance people are selling. Now look, if trading was that simple, everybody would have been like millionaire, billionaire by now. It's not at all like that, right? They will just, you know, they will just make you feel good about it, that trading is that simple. You get in, you lose the money, and they are making the money, right? And the like, you know, the main thing is, like, you know, the trend trading, the trend. You will get to see the trend traders. They believes it, like, you know, that trend is their friend, right? Because they're meant to say it so. The price is going up. You stay in line with the trend. You cannot go, like, you know, opposite of the trend, because trend is your friend and all. But no one tells you that where the trends will come to an end and where from the trend will exactly reverse, right? Because it is not a subject, like, you know, which is known to the retail guys, and you will not get it in the retail books, right? They trace the trend line, reset, something like that. But after that as well, the reset as well, they will do something like, you know, that who's drawing, please, right? Just give me a second. Please do not draw anything on the screen, right? And the trend traders, there is breakout, and after that also you will get to see, like, you know, they will do another stop hunt and they will reverse, right? And if you see the pullback guys, right, they validate, right, with the pin bar or something like that, and after that they collect some orders and then the reverses. Okay, so now if you see, like, you know, that if you see here, so the indicators, like, you know, that people, you will get to see that people are using, like, you know, 5-6 indicators, that without understanding anything, right? So they are taking the indication of the indicators, right? and in that way they look to, in that way they cannot be profitable, because the indicator will show their, like, the price, just the in the direction the price is going to go. It cannot show it, right? So what it will show is, like, the what price did, the indicator will just show you that thing, right? Okay, let me log this meeting. People are getting in and getting out. Just give me a second. So all these are the mistakes, right, that the retail guys are doing just by trading the breakouts, the support and resistance in the retailer's way, the trend line trading, right, and the pullback trading, and based on the indicators and pretty much stuff. If you trade any other stuff as well, that is also, like, that wiping you out, right? The indicator base, if I take you one example of this, let's say you guys are doing the moving average, right? The simple moving average or exponential moving average, whatever you do. So that is, like, that. So what you believe is, like, if that touches this resistance, right, and the price will come down after this, right? Yeah, it comes down just a little bit. It touches there, it comes down a little bit and holds here, so that more retail guys like you can sell, or can place their entries, right? And just after that, you will get to see what thing. They'll just spike it up, right? And there you believe, right, they'll spike it up all of a sudden, and after that you just believe, like, that price is going to keep on going up, right? If you see, it will consolidate again just to trap the retail guys, and after that it will just reverse, right? So meanwhile, it's just nothing happening. Like, you guys are just, like, placing your trade, just placing a stop loss, and they're just triggering the stop loss, and they're just getting out from the market, and that's how it's happening every day, right? Okay, so how to avoid this price manipulation? If I say this stuff, that, like, how you can avoid it, you cannot avoid it, right? Because this market is designed in that way so that you cannot avoid it. Okay, so whatever strategy you trade, it will just, like, take you out, and after that only it will just move in that direction, unless you just stay in line with the manipulators, right? So first thing first, what you have to do so, first you have to understand the retail trading, right? That how the retailers are trading. Okay, so these are the cores, right, of the retail trading: the breakout, the support, resistance, trend lines, pullback, and preview indicators. These are the core of the retail trading. First you have to learn it, and when you just learn it, you can implement on understanding, like, how you can take advantage of this, right? Okay, okay, you can unmute yourself, right? If you're, yeah, I can see, like, a Samuel PS. You can unmute yourself and you can ask your query.
Yeah, actually, my doubt is that you have talked about the manipulation.
Yeah, sure.
And as we know, a small price movement that may be around 5 pips or 10 pips, that may cost around millions to make that manipulation.
Yeah, it's correct.
So you have showed me an example of manipulation in 1 hour chart, a big spike. So making such a big candle or creating such a big manipulation, they may require higher funds, right? Maybe more than millions, something like that.
Yeah,
so
that's correct.
Is that possible to create a manipulation on 1 hour?
Yeah, exactly. It is possible. Now your question is correct. So if I tell you, like, that the higher the time frame is, the less the manipulation will be, because it takes money. The way you said, to move the market by 0.01 pip, it takes 10,000 lots, right? To move just by 0.01 pip, so it takes 10,000 lots, right? To in the 1 hour, if they have to manipulate, they may have to, like, move the market by 30-50 pips, right? So it will take 10k lots into 30-50. Yes, they have that much money altogether to manipulate, right? Because as I said earlier, so these are the groups, right?
Yeah,
they trades all together, right? They are not, like, alone.
Yeah.
So it is not. So if I talk about the penny stocks, right, a big investor can move it. But if it's about the Forex, it is written in the book, right? Even the central bank cannot manipulate it, but it can be manipulated, right? Because all of these guys are just pretty the same structure, and they're manipulating it in that way. Am I able to satisfy your doubt?
Got it.
Okay.
Thank you.
Okay.
So what time frame is the best to consider on an intraday trading?
Okay,
1
for the
hour
intraday
or
trading,
15
it is
minutes?
15 minutes, right? Because if you trade in the 1 hour trade in the intraday trading, you will just get 24 candles, and meanwhile, you won't be able to see any kind of pattern, any kind of something. So for intraday trading, you have to look for, like, a 15 minute or 5 minute. That's it.
And the resistance and support that is manipulating, you draw it on a 15 minutes or
Yeah,
one
you can
hour.
draw that in the 15 minute. You can draw that in the 15 minute. Like, you can just go to the previous resistance, previous support, and you can just draw it in that way. Just like, it will always react to the previous resistance first or previous support first before going to the major one, right? And they'll just clear the liquidity there, and after that they will only focus on the next one, right?
Mm.
Okay, perfect. So moving to the next one, right? Okay, so what you have to understand, the retail trading, the way they're losing the money, you have to understand that, right? Identify their cons, the why they're going wrong, okay, and take advantage of it, like by understanding that where they're placing the trade and by taking the opposite, right? It is not at that random, like, they buy it, we just sell it. No, there is little few confirmation needed, which you can learn in just like, the price manipulation stuff, right? And after that, what you can do is like generate ROI. It is consistent, not random. You just double your account, you triple your account. It's not like that. If you get consistent ROI, 10 to 30% a month, risking 1%, that is satisfactory, right? Okay, so after that, like, that what you have to focus is generating ROI that should be consistent, not like tons of money, not like, very high, like doubling the account within 7 days, something like that. There is there is companies, they will say like, that they can double your money, something like that, in the 7 days, something like that. But that is kind of scam, I must have to tell you, right? Just always go for like, just seeing their entries, just ask them for their links, that how they did that and all. If they can show you, then only go for it, right? Now look, the rules you have to follow for like consistent trading, right? First thing first, you have to understand that how it is structured. There is a structure, the way they're moving the market, right? And then you have to trade in the same way the manipulators are trading. Okay, if you are making money with whatever strategy or whatever you're doing, you don't need to you don't need to listen to anybody, not even me, right? So if you're not consistent, then just go for understanding all this, right? Because if you the main sole purpose is just to make money. If you're profitable for like 3-4 months, then that's pretty good. Yeah, you can be profitable for 1 day, 7 day, and that's not consistency. If you are making money for consistently 3 months, 6 months, that's what consistency is, right? And if you see here, the risk per trade, most of the retail guys are going wrong in that case, right? The retail traders, if you see, they are going wrong there because they don't calculate like, that how much money they will be losing at the end of the trade. If you ask yourself, do you calculate, right? If you calculate, then you will be consistent, right? If not consistent, then you will be break even at least, right? Because most of the traders, they don't calculate like, that this much position size will be 1% of my risk. What they are just doing, like, they are just dividing their capital, just placing their order, or maybe somebody told them like, that 0.01 in $100 capital and something like that. It is not all like that, right? And it is one more stuff. If I tell you that you always just do one thing, like, that you sit in front of the chart. If somebody told you like, that 10 a.m. in your time, you'll just open the computer and you'll just place the entry. I don't understand why most of the people are getting the entries like, buy or sell, whatever that is, just after like opening their MT4 or like, opening the trading view. How you guys get it? We wait for it, right? And when it confirms that the pattern, when it confirms that the trap zone, everything is over, then only you make the entry. Learn to trap your trade, right? Because as I told earlier, that there is direction in this market. They follow the direction, like, that if the price is here, you guys are selling there, right? Or buying there. There is a zone, right? You need to identify that zone, let the price reach there, and then only you guys sell it or buy it, right? So the main stuff, you cannot go in that way, right? Like you just open the chart, right? And you can see it. Just remember one thing, the losers will trade 10 trades a day, 15 trades a day, right? This is in their habit because it gives them the adrenaline pump, right? But it is not like that. You have to wait. And if I say like, how many trades you should be looking for at the end of the month, like, how much trades you should do, like, maximum 25 to 30, right? In the swing trades, if I talk about, yeah, the scalping stuff, you can do that if you're pro at it, right? But if I talk about the swing trading, then there must be like, that 25 to 30 trades, not more than that. Okay, swing or intraday, which is your favorite? Yeah, you can unmute yourself. So those who is having their question, they can unmute yourself and then they can talk, right? No reason that. Okay, so if I talk about the trading stuff, I'm basically a swing trader, right? Okay, let me see the chats, right? Intraday. Okay, somebody said intraday. Yeah, I basically trade the swings because I have plenty other stuff as well to do. Like, I run some business here. So for that reason, in the swing trading, you don't have to allot so much amount of time. But if you see the intraday, you have to allot like in 2-3 hours, right? Or maybe more than that. In the scalping, right? You will be sweating all the day, right? So that depends on like, what is your goals and what kind of person you are. So that depends, like, that I personally prefer the swing trading because that is more relaxing, right? You place a trade, you hold the profit, you make the money, that's it.
But then, is it true that actually there is an intraday? So you can place one trade intraday and a good trade and you're out?
Yeah, exactly. There is. That depends on person to person, like, what they are comfortable with, right? There is good scalpers as well, those who can trade within an hour and 2 hours, right? That depends on person to person and their goal set, right?
Okay.
Okay. And the last, okay, and the fourth stuff is like, don't trade daily, right? Intraday trading, those who like the intraday trading, as the name suggests, like, intraday, something day, so they will be trading daily. Even if they're not seeing any setup, they will be trading because that is day trading, but it's not at all like that, right? Day trading is not everyday trading, right? If you are not getting any trade, don't trade it because nobody have appointed you. This is kind of your own business. If you're not getting it, do not trade it, right? And the fifth stuff where everybody is going wrong, right? When I started, I was also going wrong, right? And that is only will make you profitable over the long run, right? I see, like, that you guys trail your stop loss, right? You guys increase your stop loss, right? Let's say your stop loss was here and you sold it here, right? And the price is going up. So what you will do, you will just, increase your stop loss, right? And that's how, if you would have risked 5% in that, you guys, if you would have risked 5%, that is going 7%, right? Accept the defeat in a single trade. And after that, like, you can place another entry and then you can try it another time and the probability will be in your favor, right? Do not increase your stop loss. Okay. And one more stuff, if I tell you, you have to make sure that you are holding your profits, because what I see, like, that you guys close your profitable trades earlier, right? Because you think, like, let's say you have sold one trade from here and it is dropping, right? You are in few pip profit. What do you think, like, that I want to close the trade, otherwise I never know, like, that when it's going to reverse, right? But in the opposite, if I say, like, about the losses, you just trail your stop loss, you take big losses, right? Okay, so how it will be, like, reversing, like, where upward it will be reversing, upward it will be dropping. For that reason, you have to understand the level counts, right? And the level count will be telling you that exactly up to what that price can go, and then where from it will be reversing. One tip, if I give you, right, most of the time you will get to see that, let's say if you have sold it, okay, if you have sold it, and you don't have to panic, right? If you think, like, the price is going to go up all of a sudden, no. Most of the time, no, right? You will get to see that the price, after this webinar, you can go in the chart, right? And you can check it out, like, that before reversing, it holds at a certain place. Why? Because it have to collect some orders to get the money to reverse it, right? It will be holding there, then only it will be reversing. It is not like, all of a sudden it reverses. Yes, sometimes it reverses to hit this top hunt, hit these top losses, like, this top one highs, top one lows, but that depends on the area. But if you are selling or buying, what you can do, you can hold it, right? It will be giving you enough time, right? Yep, market makers is picking orders. Okay, another question is why some people say that Monday and Friday have least liquidity, right? Okay, so what happens is, like, during the Monday, like, they will start the market and they will, start trapping the market. They'll start trapping the sellers or buyers. If you get to see now, if you get to see that every trade, every pair have ended in between the price, right? Like, the previous is higher, previous is low. They have ended most of the, if you see in the 15 minutes, you will get to see it. Why? Just to trap their orders, right? And after that, if you see during the Monday, what it will do, they will just do some kind of false move, right? And during the like what do we call it? And during the Wednesday, right, they reverses in the longer time frame, right? And in the Friday, there is some kind of myth, like, that Friday is like, volatile. Friday we cannot trade in the retail trading system. So for that reason, retail traders keeps themselves away in the Friday. And as it is known to everybody that in the Friday the market will be reversing. The Friday everybody books their profits. So that is the reason people avoid trading in the Friday. But Friday is the day, if you get to see, like, in the non-farm payroll and all, Friday is the day when the market moves the highest, right? The Friday is the day when the market spikes up and spikes down in our favor. If you know that how manipulation works, if you just back test it, you will get to see that the most of the spike is in the Wednesday or is in the Friday, right? Okay, so you have to hold it, as I said, right? Because if you don't hold it, you are just like, you're just increasing the probability of, like, of your trades. Oh, okay, another question. Let me see. Okay, so how to spot the manipulation? Yeah, I will come to that portion, right? Okay, so what you have to do is, like, you have to hold it for as long as possible. Otherwise, what you are doing is, like, you are just rewarding your broker, right? Like, that if you think like that, you are being patched with Mr. A and Mr. B. If Mr. A is buying, Mr. B is selling, it is not at all like that, right? Your broker is taking the opposite direction, right? Yeah, but if you think, like, your broker is manipulating the market just for you, no, it's not at all like that. But the broker have most amount of liquidity, right? They are providing you instant execution. So if you are buying, your broker is selling. Nobody is patching you up, like, that with Mr. A and Mr. B. It's not at all like that, right? So it is kind of opposite stuff to whatever you're reading in the books, right? Okay, so before I proceed further, let me show you, like, how you can spot the manipulations, right? Okay, let's say this is like, a previous support line, right? Okay, so if as a retail trader, like, let's say the price is coming down. Another question. Okay, the meeting is locked right now. So just give me a second, right? Let me. Okay, I have unlocked it. So if anybody is looking to join, they can join it, right? Now look, let's say the price is coming down, right? Like this. So as a retail trader, you will always look for, like, if the price hits here. So what you will look like, that you will be looking for a buy here. Like, when it shows a green candle like this. Okay, if it shows a green candle like this, so what you will get to see, like, a buy opportunity, thinking that, like, that it is going to keep on going up, and you're going to make the money. But what exactly happens, if I tell you, it will just hold the market. Okay, it is just give me a second. Yeah, so it will just hold the market so that more buyers can get in, right? More buyers can get in. It will just go a little bit up, but meanwhile, that will not go up to your take profit area, right? So what you have to do, you can see the most of the trap zone will be here. And how? Let me show it to you. Okay, here, and just after that, you have faced it. I know that, right? You'll be putting a stop loss here, right? I'm talking about the basic support trader. You'll be putting a stop loss there, and just after that, you will be thinking, like, you want to book your profit, and just after that, you'll get to see this, right? A big red candle. A big red candle is just wiping you out, right? And you have lost your money. That is what happening in this market, right? And this is taking your stop loss out. So though it will not come up to that, right? Let's say it will just come up to this, and again the breakout guys will get in, right? The breakouts guys will get in here. Okay, and after that, again they anticipate it will come down, but it will not come down. They will hold it, right? It will hold the market so that more breakout traders can get in, right? It will reverse a little bit so that the pullback traders can get in, right? And after that, it will just come down again, right? Everybody here is having their stop loss. Those who are selling it is having their stop loss there, and these guys are already wiped out, right? So these guys are looking for profit. The market will be holding it, and what will happen after this? You will just get to see a big green candle will come and wipe out everybody. I know that this thing happened with you most of the time, right? So what we do as a trader, like, we just buy it here. We just buy it here at the exact low, right? Because there is a pattern, like, which the market follows every single day, right? Which you just have to buy it, and you just have to know the levels to, like, in order to trail your stop loss to your entry zone if you're getting the perfect edges, right? And after that, it continues to their their longer tenure direction, like, where they have their goals at, like, that based on the market maker system. If you see that the previous support and previous resistance, it's not at all like that. That if you are buying at the support, your take profit zone will be the previous resistance. It's not at all like that. That depends on the level count. There is level count present in this market, and that's how they are just, like, moving the market away. There is proper rules. There is proper sets of rules. So it's not at all like that everybody is buying in and selling in and the price is moving accordingly. No, there is operators, there is manipulators who are moving this market against you, right? And if you just trade their system, you will also be taking part in moving the market according to, like, against the retail traders, right? Okay, let me log the meeting, and after that I'm moving to the next one.
Am I able to ask something?
Yeah, sure, you can ask me.
You see the zone under the support, right?
Mm-hmm.
Now, yeah, that one where we have to follow the buy. I mean, we know that. Now, what's happening? For example, I get obviously too early in. I put my stop loss very close, and obviously it takes me out. But I'm on the right thing. But I don't want to lose too many pips, if you like, on the stop loss. So because of that, it takes me out. And what I've seen, practically, they give, say, they put a railroad track, but then they come back, and then they take that railroad track, just 2 pips more, right? And then they do a bit, again, consolidation, and then they go back again, 2-3 more pips. So practically they didn't went after the railroad track straight up. They actually broke the railroad track maybe 5 pips down, and then they reversed. But I was out already because I put my stop loss too tight.
Okay, so what?
So my question is,
go on.
It's depending practically how many pips we should consider from the support down, or in the other way, resistance and above, or what should we follow? Should we, because obviously we know that this is what I'm thinking, below is actually the stop hunt, right?
Yep.
So should I wait like for 1, 2 or 3 stop hunts and then look into place the trade, or it's like I put 50 pips below the resistance?
Okay. I got a question. Now look, if you are trading in the intraday, right? If you put, like, 20 to 25 pip, right, above the daily high or daily low, then you're good to go in that trade, right? But if you cannot afford, like, 20 to 25 pip, then what you have to do is you have to put your stop loss tight, and you have to take your entry back again, right, with proper risk management. Okay, another question is
I see.
Maria's doubt are like news kindly every. Okay. So another thing, like, that depends on the intraday, and if you trade the swing one, right? So if you know this stuff right now, there is legs in this market. Let's say this, I'm talking about the high. The high will look like this, or like this, or like this, right? So let's say you are placing a sell here, right? The market will come down, right? Instead of that, right? Market went up, right? So what you can do, you can place another entry in another one, or otherwise you have to do like a bigger stop loss. If you're trading a 2 spike M, right, 2 spike peak, if you're trading that, you have to put a bigger stop loss, a bigger room, so that the another stop and high can take place, right? Like this. and then it reverses. And most of the time, if you trade the 3 spike, something like that, then it will be rewarding, right? Better than the more spike there is, the more accurate it will be, the chances of accuracy. But majority of the time, you'll get to see the market will be reversing after 3 spikes, something like that, 3 spike or 3 spikes to the bottom side, right? Because in the retail trading way, you will get to see they have a view like trading the double top, or yeah, it's like that. Their perspective will get to see like kind of double top they trade, kind of double bottom they trade, right? So that is the reason they will go up back again to wipe the liquidity out, and they will come down again to wipe the liquidity out, and after that only they will be reversing. So 3 spike, if you get to see like 3 spike, something like that, that is always better, right?
Right.
Okay, let me see another question. In the example of EU, how do you know this is going to reverse from one? Okay, let me show it to you. Okay, let's say here. Okay, let's say here this one is previous resistance, right? Previous resistance. So here it did what? This is the neckline, if you see. This is the neckline, this zone. So here, those who were buying it here, right? Everybody was putting their stop loss just below this, right? So if you see, like, it went up, and again here also you will get to see like in the spikes 1, 2, 3, 4. The one which I was telling you, right? This spike just before. Yeah, go on.
We can't see your screen. Sorry, the chat.
Sorry. Yeah.
Oh, thanks.
Okay. Yeah. Okay. So what I was saying, like, this is the previous resistance, and if you see, like, this is here. If you see, it is doing some kind of like the 1, 2, 3, 4 spike M, right? So you always have to, for this stop loss case, you always have to give a little room if you're trading a 2 spike, or if you're trading a 3 spike, that you can put a tight one there, and if it's doing the 4 one, you can sell it again, and you can make the money. And after that, everybody's stop loss was there. It came down to this, right? It made some extended stop on here, kind of like 3 spike W, and after that, it just went up to this. Why? Because this was their predetermined, like, that targeted area, right? So if I tell you like what is going to happen next, you might be asking a question. Now is trapping these sell orders, right? Okay, why we sold it? I sold it here, like, that there is level count. My students will understand. This one is a kind of W, right? That the A1, A2, right? And these are all the buyers, right? If you get to see, so they understand it. And after that, that is the reason we sold it, because it was pre-known that they will be trapping some sellers here. Okay, so where to look the manipulation stuff? Here, they will be making a range like this in this case, right? Okay, so they'll be making a range here, right? Like, that they will be trapping all the liquidities here. Now they have trapped the sellers. They'll spike it up to trap the, to trap the buyers. They'll trap the pullback out traders, and after that, they might reverse, right? Depending on the confirmation. Okay, let me see the queries now. Yeah, that is kind of market makers method, right? So the market makers and ICT, these are the 2 methods that rules the market. Okay. So if you see here, so that is what you can expect. So now this is kind of trapping the sell orders, right? Everybody is selling it. Okay, everybody is selling it. So what it will do is like, it will just reverse it so that everybody gets topped out, right? And after that, like this, everybody gets topped out, and after that, they will hold the market again, right? And why they will hold it? Because they have to trap some buyers as well, right? And after that, you can expect to reverse it, right? But if they're trapping here, then that can be sellers. So you have to take those in mind. Like, this is also a resistance, right? This is also resistance. This is also resistance. So what you should be looking for is like that. If there is trapping above that, that is pure buy liquidity, and you can sell it from there, because every retail trader will be placing a buy there, right? As now every retail trader is placing a sell. So now, or like, then it have to go back higher, right, to wipe them out, because it cannot come down, and it cannot reward all the sellers, those who are selling it. If it had to, it would have come down, directly with big spikes, right? Because they will not give any chance for them to book the profit. Okay, so okay, now if anybody is having any kind of question, just unmute yourself and you can ask, right?
Okay, I've got a question.
Yeah, sure.
I think my one probably relates more to intraday trading. And the issue I tend to find, if I notice, and this is, I think, more particular to the indices, So if it's taking like the prior day's low or high, and you then get confirmation, say it's been going down in a sell trend, and you then get confirmation it's going into a buy, I tend to wait, because sometimes I find when I go in the first candle, after the first candle is formed, the confirmation, and I go in, I find it comes to do like a stop low, a stop hunt, So I wait for like 2 or 3 candle confirmations, then I get in, and it feels, sometimes it's personal. Immediately I get in, it starts to reverse, and even when I put my stop loss about 25 pips, it goes all the way down and hits the stop loss, and then it starts to retrace back up again.
Okay, I got you. So there is like, there is like neckline, right? If I say, let's say here, right? You are trading a intraday high, right? The intraday high form,
yes,
right? Like this, it is forming, right? So let's say 3 spike is formed. So after that, if you see like that, if you look for too much confirmation, right? If you look for too much confirmation, then the price will already come down, right? The price came down up to this, right? So after that, if you're buying, or sorry, if you're selling it there, then what it will do, it will just come down a little more.
It reverses back up, yeah.
A little more, or up to this, or up to this. When it touches here, if the liquidity here in this case is out. They have taken all the liquidity, right? Every buyers is done here as they just came down. The buyer's stop loss triggered. So after that, they can wipe up, or go up again. And just when it goes up, like that they're taking the liquidity of these sellers. And after that, they will reverse again, right? So what do you have to do? Just when you get to see the angle, right? Just when you get to see the angle like this, you just have to sell it, and you just have to put your stop loss there, right? And you just have to, as it's coming down, in the case of the intraday, you have to break even, right? As it's just come down, you have to break even. And what the main stuff you have to look at it, like that the spikes, this swings, right? This swings right here, this one, right? The price have to come down to this before moving, right? Now let's say it went up, and again it's doing like this, right? In that case, it might not come down, right? Because it already have taken this, right? It can go up as well. So you have to check that, do they have already taken the liquidity out? If they have already taken the liquidity out, it shouldn't be going in.
Okay, right? Sometimes it doesn't do like a 3 or 2 stop hunts.
Yeah, it will not be doing like, it will not be doing. That depends on that how much liquidity they have trapped. If they have already trapped too much amount of liquidity, what they will do, they will just spike up and they'll just come down. That depends that how much amount of liquidity they have trapped, right? Okay, if I will just take you to one example, like in the GBP USD. Before that, let me just check one question. Please give your WhatsApp number after the session. Okay, sure, I will give that, right? Okay, look here. So the GBP USD, if you see the last day, if anybody have taken the trade, look at this, right? This one here. So if you see here, it just it just went up, right? To take the liquidity out from the sellers, right? These were the sellers, and they just went up, right? And after that, just look at this. As I told you, you have to take care of this one, these zones, right? Look, it just came down the way I was just telling you. Just when they will spike it, now they have taken out the liquidity of all these guys, right? And that is the reason it just went up, right? To wipe these sellers out. They just went up, right? And they just went up by this. They came down, right? Again like this. So it was kind of like 3 spikes in between the day, in that single day, above the previous day high. So I just sold it exactly there and just closed it. Okay, just close it, because in the intraday, if you are selling it in the US session, you should be holding it for the next 4 or 5 hours. That's it. Or if you are buying at the London, you should be holding till the next US session, because when it starts reversing, it will be a continuous move to that day's higher, to that day's low, right? Like this. This was the range. So it just went up there. It's coming down. So in that way. So there is proper areas, but there is no perfect set. So what you have to understand, that how they are taking the liquidity out, why they're reversing, right? Because if you see that resistance as well, the spike here, the buy stop orders, if you know that how the retail guys are trading the breakouts, they just taking the buy stop orders, and they just came down, right? So in that way. And these are all this kind of orders, if you see, is kind of like, these are the buyers, so they might trace a little bit, and after that they can go. That depends on the level counts, right?
Can
any
I
other
ask
queries
something?
anybody have? Yeah, sure.
Yes, please, if I may. So what I want to ask now is, on Monday, for example, when we have to draw the support or the resistance, do we talk to the Friday low and high, or do we look for bigger time frame, or what do we do? Like, for example, say I'm on an intraday trader. I woke up, I don't know, whatever, I'm waking up and I want to mark my chart to see what am I trying to do today. Do I mark the do I do 15 minutes and then I mark my support and resistance and I wait and see what it's doing, or do I go 1 hour, mark it, and then I look what it's doing on 15
Look, so what
minutes
you
chart?
have to do is like you have to give respect to the recent support and resistance, right? So if you see here, the next day, let's assume the next day I have started, right? This is another day separator. Just think about it, right? And after that, the next day started. So in that case, what you should do is like, in that case, you have to, because this is your what? This is your the nearest resistance, right? And this is your nearest support, right? Based on the next day, the market will start here in the Asian session, and after that, they will collect it. So if you see here on this day, this was the previous high. They just just touched the previous high, they came down, right? So in that way, okay. And first thing first, like they will be respecting or they will be manipulating these zones, right? These zones first, because this is coming first, and after that only they will be going to this or going to this. So first thing first, you have to make sure that you are observing the recent support or resistance. These are the recent one, and these are the major one. So if you see, right, that depends.
Okay. And if it's consolidated between those two lines, I don't get in.
Okay, so it is okay. It is better to not to get in, because they're just trapping the order. So if there are, because if it is in between and you cannot understand, like, what kind of liquidity that is, because if you want to understand what kind of liquidity that is, you have to see the clear liquidity. So where you can see that is clear liquidity. So if you see that the price is holding above, that is clear buys, right? So if you see that the it is holding below, that is clear sell orders, I mean, for the retailers. These are clear, right? But if it is holding there, it is resistance, it is support. So you don't know, like, what liquidity that is trapping, unless you are sitting in the dealer's desk, right?
Yeah, but there is, if it's doing in the middle, like you said, it's like a previous day. Do I consider that or no?
Look, first, you have to observe this one, right? First, they will manipulate this one before going to this one, right? So firstly, you have to observe this, the recent one, and then only you have to go at the previous one, right? So step by step it is.
Step by step. Okay. Okay. Thank you very much. Thank you.
Perfect. Okay. Okay. So this is the thing. Whatever you do, like, if you're trading a swing trading is like, it will be giving you highest risk reward. And if you're an intraday trader, and if you look for like 1:5, 1:3, you might not get it unless you convert your spot trades to swing, right? So what I will suggest, like, that whatever you're doing, just observe that swing areas, like, the highs and the lows, and there just make sure when that is touching, like, when that is touching that zone, you have to break even, right? You have to break even. Otherwise, it might go back and reverse, because when that is touching the previous high and previous low, it is just taking the liquidity out, right? So that is the reason you never know, like, when it can reverse or something, unless you know the proper level count stuff, right? Okay, so the last one. Okay, so how we are guiding the traders, right? That with our services. So we conduct courses like the manipulation analyst course. So that is kind of combination of the market makers and kind of ICD stuff. Depending on the manipulation, that how they are manipulating it, you have to understand. So there is 15-day live classes. So you can visit our website and you can get it, right? And apart from that, you can get to do like the live trading webinar. We trade like together every Wednesday, 5:30 UK time in the morning, right? And apart from that, we also do the fund management stuff for those who don't have those who don't have time to learn it and do it on their own. So they can give us a try with as low as 1,000 for 1 month, and after seeing the profit, we do minimum of 10,000. Yep. Okay, and apart from that, there is signal service as well. But though I don't recommend signal service, because it is like, you can do the swing signals, you can take the swing signals. That is good. That will be, you will be able to place the trades. But if I talk about the intraday signals, you might not be able to catch those trades, right? So for that reason, risk reward will like, go adverse in your case or something. So signal service, I say learning is way more better than taking the signals, right? So that is the reason you will get to see that our signals are overpriced than the normal, like, those who are providing the signal. So our course is like, lower, and then if you get to see that signal is like, higher price. Okay, another question. What is the risk reward for swing trade signal? Okay, the risk reward for swing trading signal, you will get to see like, 1:5 on an average. But if you trade like, that sometimes you get like, 7, 8, 9 as well, right? But overall, if you see, the risk reward in the swing trading is 1:5, right? But if you learn to do it on your own, so if you get like, the perfect entries, like spot trades, you can convert the spot trades to swing, then you might get to see like, a reward like, 20x as well. So that depends on like, where you are entering. Okay, so okay, course fees. The course fees are like, £499. Okay, if you pay in one time, and if you pay like, in the installments, we have also installment plans, because you can get to pay in 3 go, right? £200, £200, and £200. So if you have any kind of queries, right, you can directly ask our like, our team members in the Telegram, right? So you can ask them, and they'll be providing you all the information, right? Feel free to contact, no reason that. Okay, and look, after that, the last one is like, free guidance on risk management. If you are a new trader, right, whatever, like, you are our client or not, that doesn't matter. Just feel free to contact us. We will be providing you the guidance on the risk management for free, right? Because I don't want anybody to lose money. They are like, our clients or not, that's another thing, right? Just knock us, just type like, you need risk management guide. We will be providing you. There will be one PDF and there will be one video, right, where I explain like, how you can manage the risk like the fund managers, right? Okay, Telegram link. Okay, Telegram, you can get us like, okay, the WhatsApp, somebody asked me for WhatsApp number, right? So better than that, you can contact me in the Telegram, right? @INDROONIL, right? You can contact me personally in the Telegram. Or if you want, like, in the if you want to contact in the Telegram the team, right? That is Forex Manipulation at the team, where from you just got the links. If I tell you Forex Manipulation _team. If you're having any kind of doubts, like just go there and search it, and you can get to see like, that you can you just text it, they will be replying to you, right, real quick. Okay, and apart from that, if you have any kind of queries, just mail us right here, the info@forexmanipulation.com. Or if somebody wants this PDF as well, just let me know. I'll be telling my team to send it to you, right? Just ask it. We will be providing it, right? And you can get us at Instagram as well under the same name, Forex Manipulation, right? So you can get us in the same name, the Forex Manipulation. Okay, you can visit our website as well, and feel free to ask for any kind of guidance if you need, right? Like risk management or any other stuff. And I will say, like, thank you so much for giving your time to explain this stuff, right? Hope it helps. Thank you. Right. See you on the other side. Bye bye.
Thanks, Janelle.
Yeah. Bye bye.
Thank you. Bye.
Thank you.
Bye. Bye.
Bye.
Thank you. Bye.